The context of this trade is going to be a return to an LVN in a 5-minute candle. This is the location we're dealing with. And I do notice that if we go into the fixed range volume profile of this area and we mark where the lowest volume 1-second chart candles are, that the market does respond pretty well to those, and we're going to look at how to trade that area specifically here in this video. Initially, the market comes back to that level. This would be right here on this 5-minute chart. It's only one candle. There's a brief moment of distribution inside of this. We can see the market is flat there for a moment. And then when it comes back down to this level, it holds above that. As long as that's holding, we would say that there's the immediate uptrend on a probably 1-minute time frame that's working. The best place to enter this would have been right here at this failed sell push on the 1 second. We see high volume candles coming in down here. And then entering at the reclaim of that level would have been right here on a limit order at 72. We would have only had 2 points of drawdown. The stop would have been probably at 64, and then we would have had 30 points of upside, or 20 points of upside to the nearest high. Now we're talking about this area down here. When the market comes back to it, we have an intermediate downtrend that lasts for about 2 hours. So we would not trade against that on the 1 second chart, or raw right there. We would need a reversal on the shortest term time frame. We can see on the 5-minute there's a tail here and some congestion, and that is represented on the 1 second chart by this tail here and some congestion. There is a break above that level on the 1 second chart. We have an attempt to buy here. That would have failed. This is the break, the higher volume bars coming in here above that. That would have failed on the 1 second chart. And in continuation with the downtrend, this area from here to here would have been a good limit order sell to take for a scalp to the bottom of the range. Inside of this area, we have to be careful because we are still in the LVN, so we'd only be scalping until there is significant continuation down. For here, this area specifically is a good area to trade, where we have this failed bear push, and then we have this upside push here. Once the market goes below this, we are back in a downtrend. A new low below this into there makes that sell area a good area to sell. We also have high volume bear continuation through there, which would have been something you could categorize as the sells that were immediately working. That would have been selling right here and taking off at the bottom for only 6 points. What we will look at more specifically, however, is this major reversal. And in the major reversal, we see that there's another bear push here, which we would have sold. This area is an active sell right through here. And once that market breaks higher on this higher volume green candle, that is the failure of that. So once this fails immediately, we can buy somewhere in here. Although that buy somewhere in here would not have worked. In this case, it does. We have multiple touches of that. And it does go higher. A healthy way to enter that trend would have been at any of the high volume bull 1 second candles that are getting stopped out. So this one would not have worked. However, well, it would have worked because we wouldn't have gotten an entry there. However, if we take this area right here, specifically this candle, this higher volume 1 second candle, and look for a reclaim of that, so it comes below, it comes back up, buying on a limit inside of that candle, with a stop just a little bit lower, 3 points lower, that was a great entry. Could have been in at 77, and the market did trend upwards until 90 before pulling back at all. There's another higher volume 1 second candle right here, marked right there, going above that, the reclaim of that level. Could have bought there at 84 and had another 7 points higher. At this point, we are in a micro uptrend. When this high volume 1 second candle fails underneath that, and then we have a failure here, it turns into a micro downtrend. Because we're coming off of the LVN, we would be looking for failures of this micro downtrend to resume the intermediate or short-term 1-minute uptrend. This would have been a bear bar push down. See the 1 second candle here? That's an active sell right there. When that active sell gets failed, we can buy in it and move higher. That would have been marked here. We have this 1 second candle down, higher volume push up here, and then buy in the top of that failed sell would have had our stop at 76 roughly. Our entry would have been about perfect at 82. And then we would have trended up there for another 30 points. The reclaim buys were effective again. This market, or this 1 second sell here, we've got blown out by that high volume candle. That's the buy that we were just talking about. And then we have a push down below. We have a reclaim of that. Buying at the top of that is good, so the reclaim buy still works. Have a similar thing happening here where there's a high volume push up, slight retracement, then a reclaim of that. It's about the same level. Would have worked there. That's for immediate entry in the 1 second chart once the turn happens. Here we have another reclaim, except for this reclaim was not successful. There's a deeper pullback. Then once we go back above that level, that is a buy. However, this reclaim wasn't a reclaim, but this level would have failed if our stop was at 6 points. However, once we're in here, we would have been good. This is the failed push below that. There's a high volume 1 second push here. And the failed selling of that was a good entry. So once the market has been underway, we would be looking for possibly buying at failed selling instead of just buying the 1 second charts. There's a little bit more distribution up here. This, however, does continue to work. Once we get over here, there's a high volume push up on the 1 second and move down. Buying at that location would have been profitable. As long as that's holding, we would have been in a good place. Once we go down below it multiple times, we're again entering a distribution range. And that area coincides with this, which is very close to the double top here. So we would be getting passive resistance just from the high, and then the day type is like a double distribution top where we trend up and make two new highs and then come back down, or two highs at the same areas, better to say. If we come back to the level of the initial trend failure, which is down here, we have the push somewhere in this area, probably this one. We have this initial high spike up here. And then we move back to the right a little bit. We see the market attempt to stall there, and then we have a break below. This is a lot of volume selling below. That's a failure of that trend. And then that becomes a top, which would have been on this chart selling. Once this holds, selling right there, right around the 65 level. On this chart, it's actually not the 65 level, it would be the 78 level, which would have been up here. So there's an attempt to hold that. This was wrong. That was the initial LVN. This is where the LVN would have turned. It would have been up here, up around the 75 level. We have this 5-minute candle that's a bear bar, comes through. The initial buy would have been somewhere in here. That's like another LVN right in there. You can see that there on the 5-minute chart there's an LVN. Once it pushes high volume below that, that implies that there's potential for downside continuation. Attempt to buy here, big push down, then now selling inside of that area. We are now in an intermediate downtrend as well. So that's it for that return to an LVN.